Hi, I'm Luke LANGO, and this is InvestorPlace Quick Picks, where we communicate to you some of the market's best investment ideas in just 5 minutes. Today, we're going to be talking about one of the most exciting stocks in the market. The name Electrameccanica, ticker SOLO. Now, Electrameccanica is a three-wheel EV maker. I call them tricycle EVs. They make a single-seater three-wheel EV called the Solo, hence the ticker SOLO. This Solo EV has been in pre-production mode for several years, but it's finally coming to life. Deliveries of the Solo EV started late last month. The company's expecting to ramp production into the end of the year with big deliveries starting in early 2021. Now, ahead of that launch, you are seeing Electrameccanica stock take off like a rocket ship. Less than 2 months ago, this is a $2.50 stock. Now, as of this video, it's up at $9. This stock has gone bananas, absolutely nuts. Is it legit? Is the rally legit? Absolutely. Electrameccanica stock, this breakout may actually just be the beginning of a much longer, much bigger uptrend in the stock over the next several years as EVs take over the world. And yes, in that world, tricycle EVs, believe it or not, they're going to be very robustly adopted. Here's why. So zooming out, the bull thesis on Electrameccanica stock begins with the electric vehicle revolution. Okay, so electric cars, nothing new. They've been around for over a decade, and in that decade, growth has been pretty slow. Last year, 2.1 million EVs were sold globally. That represented just 3.3% of total auto sales worldwide. So 10 years later, we're at just over 3% penetration. That's a really slow roll. But this slow roll for EVs is at an inflection point. And over the next decade, we're going to enter a hyper-growth era where EVs go from niche to ubiquitous. Now, why is that? Because in 2020, multiple game-changing trends have converged to set the stage for mass disruption of transportation by electric vehicles. Now, what trends exactly am I talking about? Well, for starters, demand is shifting. Consumers are becoming more and more aware of the environment, more and more aware of global climate change, more and more aware of global warming, and they're wanting to do things to fight those changes, to help the environment, to be green, to be environmentally sensitive and conscious. One of the most obvious and important ways to do that is buy an electric car. So today, more than 60% of prospective car buyers want an electric car. That number is growing every single year. By 2025, it'll probably be 70%. By 2030, it'll be 80 or 90%. It's an uptrend in demand. Demand is shifting. Now, to complement that shifting demand, you also have shifting laws. More than 200 counties and cities across the world have a 100% clean energy target by 2030, 2040, or 2050. And in that group, some of the leading places like New Jersey and California have outright instituted bans on gas car sales post 2035. So you're starting to see laws also shift to promote electric vehicle adoption. Now, amid those two big shifts, technology of these cars, the underlying tech, is improving significantly. Before, these cars couldn't travel that far. They took forever to charge, right? They just were not very functional. But now, thanks to breakthroughs in the battery technology, these cars are traveling very far. The top performing EVs are getting 300, 400 miles per charge, which basically puts them on par with a gas-powered car. And guess what? Electric vehicle range, that's been on a steady uptrend because of technological improvements. How far your gas car gets, that's not going up. It's been flat for decades. So if these trends do persist, which they will, then by 2025, 2030, electric cars are gonna get way more range than a gas car. Now again, on top of all of that, you have falling costs. right? EVs, another big obstacle to adoption was that they were super expensive. But EV prices have come down dramatically over the past decade to the point where the price of an EV and the price of a gas car are pretty darn close today. And again, the prices of gas cars have been steady for decades. The prices of EVs have been falling rapidly. These two trends will persist. As they do, EVs are going to be significantly cheaper than gas cars by 2025, 2030, 2035. So add it all up, and the future couldn't be any clearer. Electric vehicles are taking over the world, and the time to invest, the time to get in on this space is right now. Okay, so the electric vehicle market is going to be huge over the next 10, 15, 20 years. But what about three-wheel EVs? What about these tricycle EVs that Electrameccanica makes? Well, history says they're gonna be a flop, right? Small cars have never, ever sold well in the US. But that's gonna change in the 2020s. And it's going to change because who is buying the car is going to change. Traditionally, the auto market has been driven by families, by big families that live in suburbia, that have garages, that have space, that have healthy incomes, that have healthy credit scores. For that type of person, for that demographic, bigger is better. Absolutely, they don't buy small cars. But for young, urban consumers who are just starting out in their careers, who want to save the environment, who are hyper concerned about global warming and want to drive an electric car, who live in high rises that don't have big parking spaces, who spend all their time in cities where there is not much space. For those people, bigger is not better. Smaller is better. More versatile is better. Cheaper is better. And guess what? Those consumers, those young, urban, cash-strapped consumers are becoming the driving force of the auto market. For years, those consumers shunned car ownership because they grew up in the era of Uber and they grew up in the era of Lyft, and they didn't need a car to get around. But COVID-19 kind of switched things up a lot. And on this front, it made consumers say, maybe I don't want to be in an Uber. Maybe I don't want to be in Lyft. Maybe it's time to grow up and get my own car. And so you're having a huge swarm of young consumers who never owned a car before entering the auto market. And this is a multi-year secular trend. Those consumers are not going to go out and buy Hummers, okay? They're not going to go out. They can't afford Tesla Model X's or Model S's. What are they going to buy? A lot of them, I guarantee you, a lot of them are going to buy small, cheap, three-wheel, single-seater EVs. That's an Electrameccanica car. That's a solo car. And so for this reason alone, because of this shift in the car buying demographic, I think that for the first time ever, small cars, small electric cars are going to sell very, very well in the 2020s. Of course, I would be totally remiss if I didn't talk about Electrameccanica's huge opportunity in the commercial world. Right? Everything we've talked about so far is Electrameccanica's opportunity in the consumer world. Because of a shift in car buying demographic, the companies will be able to sell a lot of three-wheel EVs to consumers. But the opportunity in commercial is just as large. Think about all the purpose-built vehicles that first responders use. Or think about all the delivery drivers in their cars. Or think about campus security vehicles, corporate security vehicles. Those are gonna get electrified too, and they don't need to fit more than one person with a little bit of cargo space. So these companies, as they electrify, are gonna look for cost-effective solutions, only need one seat. Why not go solo? Of course, they're not all gonna go solo, but I could see a lot of these companies going to choose solo cars for first response, last mile delivery, corporate campus security, things of that nature. So Electrameccanica's opportunity in commercial is probably even larger than its opportunity in consumer. And when you combine both of those opportunities, well, that's why Electrameccanica stock has been taking off like a rocket ship. So is this big rally in Electrameccanica stock over? No, far from it. Electrameccanica is a disruptive company defining a new category of electric transportation in the consumer and commercial end markets. It's a long-term winner. It is a long-term winner. And the huge growth potential of this company is not fully priced into the stock today. I see the stock heading to 20 and potentially even higher in the long run. So down here below 10, it's still a buy. Granted, the stock is technically overbought today. It has come a long ways in a short amount of time. Maybe don't chase the rally, but on the next big pullback, be ready to pull the trigger. Well, that's all we have for this edition of InvestorPlace Quick Picks. I hope you like what you saw. If you did, please subscribe, hit the notification bell, follow me on Twitter, or if you like to read, come over and visit us at InvestorPlace.com, where we have some of the market's best analysis. Until next time, cheers and happy investing to all.